Hi there traders, and we're back with FX Explained in the Forex Zone. So here in the Forex Zone, we're going to take a look at day trade options for today on Friday. So a regular video we're putting out on a weekly basis on Fridays, taking a look just at the day trade views in here. If you want some more information about what we can do in here, maybe go to Market Chartist and we can give you some more information to sign up for these dailies every day. But right now we're going to take a run through of the major foreign exchange pairs. We're going to take a look at the euro, the pound, Canadian, Australian and New Zealand dollars, and also the Japanese yen. So in here we have euro versus the dollar. Dollar weakness is the primary theme in here that we've seen for the second half of June due to a more dovish Fed. Okay, a more dovish Fed equaling US dollar weakness. Surging rally for euro dollar, having broken back down through 112. Well, initially up through this trend line up to 113.48 for a more bullish shift, then back down through here at 112 to neutralize that, and then back up through 113.48, creating a bigger basing pattern in here and real risk to the upside. And setting into the day, we've had a slight pullback, but our threat still seems to be higher for 114.10 and 114.48. Below 113.43 shifts more negative. Not as positive a tone for the pound in here. Brexit woes continue to weigh on the pound, so not doing as well against the dollar, but dollar weakness still from mid-June. And whilst above 126.41, we see a basing pattern in here. It's kind of a very kind of complex inverse head and shoulders, like maybe shoulder here, head here, shoulders developing here. You've reversed this trend line. You've got this kind of neckline running across here for this kind of inverse head and shoulders. That's been broken. So really for us, whilst above 126.41, we're looking for challenges to 127.25 and 127.84, maybe even critical 128.14. Let's take a look at now the Canadian dollar. You've got double trouble in here for dollar CAD on the downside. Dollar weakness coming from what? The Fed again, okay? More dovish Fed equals a weaker US dollar. But also we've had those Middle East tensions between the US and Iran, and that has created a stronger oil price, and stronger oil often leads to a strengthening Canadian dollar. Remember, Canada a net exporter of oil. So stronger oil, stronger Canadian dollar. So Middle East tensions and the softer US dollar in here, sending US dollar, Canadian dollar plunging lower to levels not seen in here since the early part of this year. And again, setting up more bearish going into the day. 130.79, 130.64, maybe down to 130.00 options target going into today. Aussie and Kiwi next. Aussie first of all, really strong rally. Risk on moving here on anticipation of a global trade deal in Osaka, Japan today, potentially tomorrow, between the US President Trump and Chinese President Xi. And really upside risks remain in here. We've had some dips, but then strong rebounds. Reversed this trend line, taken out resistance levels, sitting right below this key resistance at 70.22, aiming for 70.12, 22, 27, 48, maybe as high as 69, 70.69. Similar story in here, but a more bullish tone for New Zealand dollar. Double bottom for the New Zealand dollar, up through 66.81, 64.80, 64.84 the lows. The interim high 66.81. Up through there over the last 24 hours or so has signaled a double bottom, a bigger double bottom pattern. That sees the bigger picture threat much higher for the New Zealand dollar, maybe up towards 69, 69.50. In the short term, 67.09, 67.24, 67.48 upside targets. Only gets more negative below 66.67. And let's finish off in here with the US dollar versus the Japanese yen. In this down trade in here, right the way from April, an acceleration lower. Again, a more dovish Fed in here, seeing the US dollar yen accelerating lower. Rebound in here because of hopes about a trade deal being done. So we've seen that rebound in here over the last 48 hours. However, whilst capped out below 108.16, we're looking for, even though we've been capped at 108.16 resistance and at this down trend line, the very short term risk was above 107.33 is for a pushback higher. We see this rebound maybe continuing in the short term. Surrender of 107.33 today, though, would see a more bearish theme in here resurface. Okay, this has been Steve Miley in the Forex Zone. Catch you next time.